Good morning, good afternoon, good evening, traders, wherever you are in the world. Hope you're well. Hope your Tuesday is going fortuitously. The US stock markets have just opened. Remember, they're opening an hour earlier if we're in Europe or other parts of the world because of the change to summertime in North America. And they're green. They're red again after yesterday's huge sell-off. More on that when we have a look at the chart. But massive sell-off yesterday. The worst day for the Nasdaq since September 2022, I think it was. I was reading this morning. Yeah, big red down candle on the Nasdaq. Some key areas we're into at the moment. The S&P 500 is off 8 and a bit percent from its all-time high. Nasdaq itself is actually in contraction zone, which means it's come down by 10% from its all-time high earlier in the year. So yeah, is this buying opportunity? Some are saying it is. Some are saying there's some more to go. You never catch the bottom of these corrections. Historically, stock markets go up over time, so there'll be investors dibbling in key stocks. Interestingly, the big tech 7, the big the tech-heavy Nasdaq's obviously had this biggest hit, but they've been driven by these huge 7 or 8 big tech companies. Obviously, Nvidia has been the darling of for the last 2 years. Also in correction mode. There's only, I think, Facebook or Meta group that are still positive for the year so far. I think they're up a couple of percent. But the rest of them have been hit quite significantly. So potential, buying opportunities for those as well. Or, the valuations are becoming to be a bit cooler. They're still quite heavily and richly valued, but the AI story hasn't really gone away. It's just how the Trump administration is seeming to spin its rhetoric as the rhetoric swings from more positive to negative. Because all it takes is a positive swing again today, and we might have a big rally, a turnaround Tuesday for the stock markets. But anyway, we're here at the moment. Let's get rid of my great big head. You don't want to see that, do you? I'm trying to see the information. There we are. So JOLTS, the jobs openings and labour turnover, basically, is what JOLTS stands for. It's created by, if you want a bit of history, I always like a bit of history. Do you want a sweatshirt today? There we are. We've got our prop trade sweatshirt on today. JOLTS was actually created by the former head of the San Francisco Fed. I assume it was San Francisco she was at, a certain Mrs. Janet Yellen, to look at the churn in the market. So people move from job to job, which is what JOLTS really captures, and as well as actual physical job openings. So we're expected 7.65 million for the data in about 10 minutes time, up a tad from last time at 7.6 million. If I just go to the Forex factory calendar, I've got this little chart here which ably demonstrates this issue about the cooling, as everybody's been saying about the jobs market. But the jobs market generally remains very robust. Earnings still remain robust. We had that saying very robust, I'm still happy to use the word robust, to the upside, despite obviously that non-farm payroll data on Friday. However, as you can see here, the jobs openings, it is continuing to decline. It's under the key thing here, which is added to the rhetoric about, you can see that there hopefully, the rhetoric about jobs cooling was as we came under 8 million. We came under 9 million late last year, and we moved down quite significantly. We were sort of holding above 8 million, but now we've breached that 8 million, and we've been under that quite significantly. So you see here, last few months we've been touching these low levels. But if we look to the left again, where is jobs openings? Well, they're still well ahead of where we were pre-pandemic, so pre-2019. Remember, it's 5 years now in the UK since lockdowns took place, March 2020. What a 5 years. So here in the US, the openings still remain ahead of where we were pre-pandemic. So obviously things went. We spent, all the Americans and all the central banks spent a lot of money trying to support economies through the COVID crisis, and we overreacted, and we're now down, but we're still ahead. So this is still healthy. Around about 8 million. It's a healthy sort of number for the jobs openings and churn in the marketplace. So 7.65 is expecting about 7 minutes. It's not, although it's a red high impact event here on Forex Factory and similarly on investing.com's calendar here. It's a 3 bull impact. So it's the biggest news of today. Obviously, anything that's coming out of the White House or an economic advisor or the president himself is having a bigger impact on markets. And it was Trump's reluctance to call out the support in the stock market, which he did very much during his first term, on an interview on Sunday, that added to the significant weakening of sentiment yesterday. So JOLTS up in 5 minutes. So I'll have just a quick look through the charts ahead of that. This is the Nasdaq 100. Huge candle down yesterday. We were down on open in the cash market. Here on the derivatives markets, were actually up. We've up from lows earlier in the session at 19,125 we went to. If we zoom this in, this is the daily candle, remember, my friends. Huge down day yesterday. And where are we if we look to the left? Well, we're through this pivot area here now. We breached that area, so there's potentially more weakness to come. If we go up to the weekly chart, obviously some will be buying on this big dip, breaching the 50 period weekly moving average for the first time since all the way back here, which was the beginning of 2023. So for the stock markets rallied really aggressively during 2023, during 2024, but as ever, the sell-off becomes quite aggressive. And look at this. This is paralleling or parroting or in parallel with the 4-week sell-off we had here in the summer of 2024. So 1, 2, 3 weeks down, we bounced in the fourth week here in the summer, and we rallied into the year end. Here we're into our fourth week down. We're under the 50-week moving average. We've breached significantly the 20-week moving average, which we only did that once here. So this is certainly looking much weaker than the sell-off we had in the summer of 2024. Where is the floor? Well, as you can see here, we're into a key, as I've said, a key support area here through 19,500 on the Nasdaq 100. The next big line in the sand, if you look at this weekly chart, so this 4-week, 6-week cluster here, which takes us to 18,500. So 18,500 is probably I don't know, it might be 100 or a 200-week moving average. I haven't got that on here on this weekly chart, but certainly that's the next big support area if the 19,000 level gets breached. So a breach of 19,000 will certainly test, I'm technically arguing here, the 18,500 level. And obviously, we're only in day 2 of this current week, so it's too early to tell if indeed this breach of the 50 period moving average is going to continue after yesterday's sell-off. So come back to this weekly chart at the end of the week, obviously, but here more on a trading level. This has been weak, as we've been saying, since the 21st of February, went under the 20-day moving average, and the following day, or the following Monday, the 24th, we went on the 50-day moving average. We had a flat 50-day moving average. At that point, we were rolling over. We were adding we were short from the end of January, or had been short from the end of January, and some big down candles there on the 27th as we came into the end of February. And then this monster one we had yesterday, where the Nasdaq lost 4%, its worst day since September 2022, and all stocks moving over to the downside. And I'm sure you all saw the headlines yesterday. Tesla off 15% yesterday. Obviously, some political shakeout for Mr. Musk there. So Nasdaq in contraction zone, it's down 10%. For it to go into proper recession or retrace, we are looking at a 20% decline. We're currently just over 10%. So the S&P 500 is down 8.3% from these highs here at the end of or the middle of February. But as I say all the time, markets tend to go up much more slowly than they come down. We had this congestion. I was saying myself, we were very positive. Congestion at highs. That's what we were looking for. We were trying to hold 6,100. That really was a step too far. 6,000 looked okay, but we breached through it really, really quickly. And here, 5,700 was my next support zone. You can see this in the S&P 500. There'll be some analysts tweaking about buying at this level and will have bought at this level as we crashed through yesterday. So we would have had buyers again yesterday. But see what's happened. We've broken and we've run into this next cluster level here, this next swing area here from July and September last year. And that's where we sit at the moment. So again, here for the S&P 500, many are still talking about 6,000 plus for the end of the year. Many analysts, but we're down currently. If you again take this one to the weekly, just before the data comes out in the next 2 minutes, we look at the stock market in a minute. Again, we've got this 4-week decline, and under the 50-week moving average currently. So my headset is talking to it, so to recharge it. It'll probably last the length of this presentation. Just excuse me a sec. Live, is there? There we are. So much for cordless wireless headsets. I thoroughly recommend this pair. Plantronics, great kit, but I'm biased. I've been a big Plantronics fan for many years. But anyway, that's a story for another day. So yes, as you can see here, the weekly candle also under its 50-period moving average, which will tweak lots of people. Are we going to bounce back for the rest of the week? But certainly Monday was a big sell-off for stock markets. And hopefully you've been short and got some pips on that one, my friends. If we go back to where are we? Data's out in just a second or two. 30 seconds. That's what I got it on here. It should update here without me refreshing it. We'll go back to our calendar in a minute. So 7.65 million were expected. Yeah, the Fed, obviously we're in a Fed lockdown zone and they're not allowed to speak, blackout zone, because they're not allowed to speak publicly ahead of their meeting next week. So no comments directly from the Fed. Obviously the politicians will have something to say, but a strong, a number around about expectations, 7.6 million. Anything over 8 million will show, the stronger economy. Anything that's starting to sink under 7.5 million or down to the 7 million level will be taken as as quite positive. But that's come in at 7.74 million. So there's more openings. And remember what this is. This is people transferring between jobs. It's job availability in the marketplace. So that's a bit of a throwback or counter to the non-farm payroll data we saw on Friday. Obviously, this is lagging data as well, as they as a lot of this survey data is 35 days from the end of the month. But obviously has an impact on how consumers are feeling and how businesses are feeling. They've got lots of job openings. So 7.74 million. So it's spiked back up to this. Actually, it hasn't updated there, has it? No, that's still the February data. Coming at 7.74 million, so it's better than expected. Have a look at how the dollar's reacted to that. The dollar's been continuing under pressure. The euro went over 109 this morning. That's the key 109 area. Remember we were long on this last week and got out before non-farm payroll. I was looking to perhaps get it back in yesterday. I didn't actually do that yesterday on euro, sterling, cable, and dollar yen. Looking to short that one, but missed out on that. But that's trading for you. But this trend remains very much set, as you can see here, to the upside. We'll see the immediate reaction if we go down to the 5-minute chart for the euro. As you might expect, dollars picked up on that positive jobs data. So here on the 5-minute chart, it's come back down from this high of 109.30. Was that I thought we got to 40 at one point today. No, 109.30. So again, we just if I just go up to the higher time frame, you can see this is an area. The 109 area was last breached incidentally. So I put on Discord this morning on election day, the 5th of November. We obviously didn't know that Trump was going to be president on that day. It was until the following day, but we were last at 109 ahead of election day at 109. And we got to 109.30 on that day as well. So if I just try and stick that there, right, you can see that. That's exactly what we've done again today. 109.30 zone's been tested, and so you might expect a little bit of profit taking, a little bit of pullback on there. The Dow, the cash Dow is down 5.5 of 1% at the moment. The S&P is down 0.12 of 1%. The Nasdaq's up nearly half of 1%. At the moment on that data coming through. So Nasdaq's bounced a bit, but remember, had a massive sell-off yesterday. The Dow, the best performer of the three major indices, down 0.7 of 1%. Currently, so Euro here on the 5-minute chart, getting hit on that data. Literally still 2 minutes for that to complete. If the 50 period holds, we might bounce back off there, but we're holding, we're down 109 on the, so dollars up a tad on that JOLTS data. If you wanted to trade that one, that's moving that way. Let's have a quick run through some of the other major crosses here. Sterling 129.25, having been as high as 129.50, and again another one. If we go to the daily time frame, having a right old run against the weaker dollar, slowing down. We had a down day yesterday. Again, we were long this last week, and we closed out on Friday. After, in fact, the close of the day, to be honest, after non-farm payroll. Down yesterday, and again back up today. So 130 again comes back into play, and again an area we haven't been to since just after the election, when sterling was testing that 130 area. It couldn't hold above 130 pre-election. We've been under it, couldn't get back over it since the election, and we continue to move down. So not performing quite as well as the euro. The euro is very much on a rip, thanks to the pivot from Germany with regard to its defence spending, and obviously the impact on treasuries, German treasuries, and wider euro treasuries as well. So sterling still shy. The next big line in the sand at 130, but it's currently holding 129 at 129.25. Kiwi 62.82. So again, bit of a sideways action for the Kiwi. Again, I don't know many of you trading this. Euros, dollar yen. Dollar Swiss, we were short, and that one looked a bit more positive yesterday. At some point, we were all the way down here at 87.50 zone at some point yesterday, but it closed. Dollar came back yesterday. We're back down again. Again, another one we were going to add to our short positions. I was thinking about adding to a short position yesterday, but didn't. But the trend remains still set to the downside. So Swissy, simply because we'd come into this key support area, I didn't take that any lower here this December. So this is a big support zone here at .88. We're at 87.93 at the moment. So a break of this, when we'll next leg down, will take us to 86.50 from end of October, again pre-election system. So all the post immediate 5th of November movements are all getting wiped out. So 7.75 million for the jobs openings coming in, better than I expected. 7.65 million. Let's update our calendar here. Tuesday, 7.74 million there we are. And last month actually getting revised down a tad to 7.5 from 7.6 million. It's 100,000 revision lower, which is relatively significant. Hence the weakness we've seen. The bounce back we've seen in the US dollar. Dollar CAD 144.70. Dollar coming back these last 3 days. So strong Friday, courtesy of the weakness in the Canadian jobs number on Friday, as well as the obviously that miss we saw for NFP. Followed through yesterday, and we're at 144.64. So line in the sand, end of day basis is just above us there at 144.77. A break above there, we might start to push this a bit higher. Obviously, Mark Carney, former governor of the Bank of England, is now the nominated Prime Minister in Canada. He has to hold elections by October. He might hold a snap election, who knows, try and give himself a mandate. But the Liberals in Canada were down and out, out for the count. Trudeau was very much under the cosh. And the Conservatives were coming back quite strongly in Canada. They still look like they're leading in the polls, but Carney is quite a shrewd character. He's taken the Donald on directly, as Trudeau was calling, much the chagrin of Trump supporters. Yeah, dollar CAD 3-day rally continues. We need to break above 144.75 on an end of day basis. This is going to continue to move to the upside. Otherwise, we could cool back down. A very flat 50-day and 20-day now starting to break. So this might be some legs in this if this break is confirmed here, following Mr. Carney's win of the Liberal Party in Canada. So see where that one goes from here. Dollar CAD in focus because of the jobs data from Friday. There's a headline just running across my Reuters screen here saying Trump to declare national emergency on electricity. I'm not quite sure what he means on that. Is this the idea that he's wanting to get these individual power plants and drill, baby, up and running again? Interestingly, the crash we saw in the stock market yesterday, we had the energy sectors was up despite the big fall we've seen in oil prices. Natural gas continues to move to the upside, but we'll have a look at that in a minute. So sterling, let's go back to the euro here in the 5-minute time frame. Dollar is still perhaps given as its immediate response to the data, stronger dollar. It's found a bit of a floor, and it's had a up there and it's come back down. So still airing to the downside there on that 5-minute time frame. Will we get to the 50-period moving average at 109 or 5? Not currently, but that's looking like that might happen. We'll keep watching that one to the downside. So let's have a quick run through everything else. Cryptos continue to be battered. Bitcoin at 81,000. Let's take the fine. Let's go to the daily again. So that key level we talked about earlier this month, this big shakeout we had here on the end of February when we went down to the 78,000 level. Unsurprisingly, we've tested yesterday and we've punched lower. Also today we've actually been lower as well. So I'm just going to stick that on my chart here. So just bear with me a sec, my friends. So our current low, our 2025 low, is now in at here at 76,500. Was tested earlier today. We've bounced off that. These are intraday spikes. On an end of day basis, yesterday's low was our closing low at 79,400. So we've bounced off that so far today, but the trend, as we've been saying for a while, remains to the downside. The first big breach of the 20-day moving averages here at the beginning of February, and we haven't really looked back from that big down candle there on the 4th. Lots of sideways action ahead of that. All looked quite relatively positive. As I remember, saying myself, we're consolidating at highs above the 92,000 level. That was the key thing. That was the first worry day, the 25th. We went down again. We recovered following the weekend announcement. I think that actually was the weekend, wasn't it? Trump strategic reserve, and then it's disappointed. The data there's a lot of his first term proves the case. The devil in the detail, and a lot of it is not there. A lot of it disappoints, and that's really what's happened here. With the expectation about the strategic reserve, are they going to buy new Bitcoin? No, they weren't. They were just using all that acquired from fraud and criminal activity, but it just needs another comment about the perhaps we'll look at doing that, and we'll perhaps Bitcoin will be off its bottom, but certainly the breach of 92 was the key break, and we're into 78, and that breaks us down to 70. I said today we've been intraday at 76.50, so that now pulls us back to this congestion zone we were having around about the 65,000 level before we broke out again. Ahead of the election. There's November 5th here on the Bitcoin chart, so that's the next downside target around about the 70 zone, and then 65 zone for Bitcoin. If this wave is going to continue, is going to run to its potential natural low level. You can see the resistance area through there, 75,000 next level, so 70,000. So 78,000 has been breached, is what I'm trying to show you here on the Bitcoin charts, on the daily charts. Energies, continue to decline. Oil, $67 US oil, bouncing off this 65.50 area, which we've tested again today. Quite a good positive day today so far, up $2, $250 a barrel. But that shakeout, the big down day we had on March the 5th, where we tested 65.50, has been tested again today. So the trend remains very much to the downside. The 20-day moving average for the oil market is at 69.20 now, as we said last week, sub the key $70 level, and the big end of day support we'd had here during the end of last year at $67 is providing a resistance to the upside in this downtrend. So a break and hold of $76 will be positive at the oil market. A failure to break and hold this 67, I should say, no, I'm saying 76, 67 level, and we'll be down again, testing 65 to the downside. Again, if we just go up to the weekly chart on oil as well, we can see what a shakeout it's also had, and here this $76 level. So I keep saying 76, I mean 67, you fool. $67 is absolutely key here on this weekly time frame. We look to the left here, it's going back weeks and weeks, months and years before we've closed under that 76 level on an end of week basis. This was March 2023, and then before that was all coming out of the COVID crisis, the charge we had in 2021. Oil remains weak. $67, as we've seen on our daily time frame, is key support area. Are we going to hold it? As you can see, we're playing around with that level on a daily basis here. Similar setup for Brent, UK oil, around the $70 level. That's been breached. I don't talk about this more, but there you are. Brent's even weaker than US oil, you could argue in some cases. Conversely, natural gas continues to rally to the upside. This is a big uptick and a trending market that's holding its 50-day and 20-day moving average into the end of February and here at the beginning of March. So if you've got any natural gas traders, that's booking the trend for the oil market and rallying quite strongly. That S&P 500 is now down 0.5% today, so stocks remain under pressure on Tuesday. There's no bounce on Tuesday. And finally, gold and metals, but gold I know is the one you all trade. I'm still long this one from the other day. I nearly closed it out on Friday, and I nearly closed it out yesterday as it went into the 20-day moving average, but we actually held the 20-day moving average. So that's still open, although it's really not going anywhere. It's had a good day today. I might actually say close that flat because it's not going anywhere. But that would be classic, wouldn't it? I've been out of the money for the day I opened it, 1, 2, 3, 4, 5 days. 6th day, I'm back in the money a little bit. We're just about over our entry here and close it flat. So now it's actually going the direction that I was hoping it was going to go, or perhaps expecting it to go here from the 4th. 20 is held, so let's keep it open. Don't just knee-jerk reaction on that one. But it was a bit of a weak, small position. I'm not that bothered about that one, to be honest. But if the dollar continues to weaken, we could see a new attempt for a new all-time high again for the gold market, but it might already be in as well. It might be this consolidation at highs we'd seen in the stock markets before gold comes down. But the key thing yesterday was the fact that the 20-day moving average held on close. Again, we've been under play with it today. We'll have a look at it this tonight, but at the moment that's still open. As far as last night's positions, if you weren't with us earlier, they were all good to go. Here on our where's my in the Discord group. Join us on Discord group, guys. Oh, it's interesting. Not here on strategies is where I put them all. So last night, well, this was during the day yesterday. We were short pound yen from 89.50. I was looking for about 60 pips on that. And last night's end of day positions, these were those I talked to you before about scalping. We're looking for a quick 30 pips, and then I evaluate in the morning whether we close the whole thing or leave it on. I'll put T1 on here. I closed them all off today, and interesting of all, they've rebounded so to negative. So that's if we didn't have the target, it wouldn't have been taken out. So 123 pips yesterday or this morning today, and we lost. What did we lose yesterday? We lost 40 pips, 43 pips yesterday on those two trades from Friday night. So we're up for the week 60 pips, 50 odd pips. I think at the moment. We'll do the maths in a minute, but anyway, so yeah, Kiwi, that was pound Kiwi. We were long. That's continued to move up. I think Kiwi yen has reversed. That short, I think it's bounced off that one and gone back the other way. And pound yen, 63 pips to the downside on that one, or 63 points to the downside on that one. Interestingly, Thompson's put a request up there about what's the best time to do education lies. Okay. 15, 17 the time, so that's 3 till 5. Click and vote. Okay, cool. I've only got 2 votes, so have a look at that, guys. If you're here, I'll push you to that. Have a quick vote on that one. So let's just move that out of the way. So anybody got any charts they want to have a look at? Do let me know. Let me just check the chat box. There's nothing there. So let's just go back to the euro, see if we've had maybe this is really the main data of the day. So 109.12 the euro. It's good, keeps defaulting to the daily time, isn't it? 5 minutes is what we were looking at. Let's just refresh that. So we did that. Oh, there we go. Well, that's why I've been talking. We did go in to take that 50 period, so that would have hit target. We've tested further down to 109, so I'll be quite happy with that. I would have gone short. This is the news here, rallied up here. Stop loss initially would have been up there, the turn of the market. That's the rules, remember this one. This one's still actually technically short here on this 5-minute time frame, but it would hit my first target here, 105, for about whatever it was, 3 or 4 pips, 4 pips on the news. All pips count. Like we say, those 30 pips a night, they soon add up, my friends, and it's just being consistent. We're giving that back up at the moment. A break over here would have closed that short position anyway, but we're out of that short for euro dollar there, the euro coming back, dollar weakening a wee bit again. And if we just go to the indexes, you can see the S&P down in this first hour of trading today. There's the open here at 1:30 it opens. It's 15-minute time frame. It's that one. But we've been down all day. Lots of volatility around the 2 o'clock JOLTS data, and continuing to move to the downside. So 15 still remains under its 15. It's 50 and 20 period moving averages. That cross on the 50. 15, the 30 will be negative also. And again, 50 is held there. So big move down, retrace, can't hold. I certainly can't break the 50. We're over the 20 for a little while, but not much steam. And then there, here at 12:30, that's the last re-entry on the 30-minute time frame. Might have stopped you out if you hadn't had the stop loss up there on the 30-minute, but that's still short. And the hourly is also still short, similar big down leg retrace into the 20. Next entry there was on there at 56.15.33 on the hourly trade, and continuing to move down. So the low of the day 55.54. All the fives for the S&P 500 here on our chart here. Are we going to test it again today, as the live market is 15 minutes into its US a day? We might see some a bounce back Tuesday. Who knows how it's going to end up? Let's just follow the rules. But they're all still short, those index positions there on those time frames. So as I said to you, as I say to everybody who who listen or don't listen, it's up to you. You know, have a system, trade your system, and the very best of luck, everyone. I just want to share a little file I came across this morning. It was an article that was in the Daily Telegraph in London, which I thought, that's quite interesting. I haven't seen this written down for a long time, but I remember reading this when I first one of the first times I read. There's lots of anecdotal and numbers you keep kicking around. There's the 90-90-90 rule, the argument that 90% of traders lose 90% of their money within 90 days. Some people say within 90 minutes, but it's just it's a bit crass. But these things tend to get traction, and people start just repeat them, and they start to believe them. I remember looking at the 357 rule. I say when I first started buying stocks back in the mid 90s. But just let me interesting. It was in the Daily Telegraph, not paper I read a lot, to be honest, but interesting note here. So 3%. So the 357 rule rules from the Daily Telegraph this morning. 3, risk no more than 3% of your capital per trade. Okay, I'd talk about 1 or 2%, but that's fair enough. A lot of people talk about 3%. 5, aim for a 5% return on each trade. Okay, that seems a bit heavy, but if you're risking 3%, you're making 5%. Sort of makes sense, doesn't it? To just less than 2 to 1 rule. That's fair enough. And this is the other one that I do try to hang on to. 7, a maximum of 7 trades at any given time. I think the other week I had 10 or 12 open at the moment, but I've been doing it a long time, so I'm managing my risk is everything, absolutely everything. So more than 7 is manageable for me personally, but that's just me. That's how I swear. So the 3-5-7 rule in trading. Firstly, 3% risk per trade is a common and well-established rule in managing risk, while trading is a good protection against excessive losses. Fair enough. 5% return target is in line with aim for consistent, moderate gains rather than taking excessive risk for large gains. Consistency rather than a Hail Mary pass with little chance of success. Hail Mary being, let's blow it all. Let's go for a big one. And finally, the 7 trade limit encourages traders to focus on quality trades rather than taking too many positions at once, which can have dual effect of diluting attention and increasing risk, especially if you're watching them, especially if you're trying to manage them on a short-term basis. Obviously, if you're investing, you're churning your portfolio over a longer period. That's a lot different. But trading and investing are 2 different protocols, 2 different styles, 2 different approaches to making money in the markets. But anyway, I just thought I'd share that with you. I hope you're having a great day. And before I go, remember we've got our 25% discount for new first-time challenge contestants, and 15% discount for those of you that have got an account open already and want to open another one. So if you go to the challenge page here, the standard challenge, whatever size you want, I like the 25, 50,000. I mean, if you got the money, 100,000 account can be yours. For probably, what's that for? If you're new, it's $500. So take 25% off that. and you've got a huge account, $100,000 account. The most popular is our 25,000 one, which comes in around about $160 if you're new, and 50,000 for new, 25% off that 345 comes in at around about 260, doesn't it? Yeah, if I do my maths. Yeah, do my maths right. So a new 25 in here gets you the 25% discount if it's your first time opening an account with us. If you're been around with us for a while, remember we've been around, we've been in business, we're all helping you all since November last year. We are new, but we do know what we're doing. We've been around the block many times. You can just see my wrinkles on my forehead probably. But get 15 in the coupon code here, gets you a 15% discount. So a $50,000 account would come in at what's that? I've had to write that down. Yeah, less than $300. That's why I made a note of that. So it saves you $50, 15% off that. I mean, you can. I mean, if you want to start with just a $5,000 account, it doesn't give you that much leverage. It doesn't give you that much opportunity to take a number of trades at once. But accounts, if you're new, starts from about $40. 15% will take you down to about 46.75. I think it is. If I did the maths, 46.75. So less than $50 gets you a $5,000 account. If you haven't got $50, my friends, you shouldn't be trading. So yeah. Go and do something else because your mindset won't be right about it. But the beauty of the proptrade.com is we're here to help you, and the rules are there. You've got to stick to the rules. So it's the targets are manageable. They're not easy to do. You've got to have a system. You've got to have a strategy. You've got to have a process is the most important thing. Two-step challenge or a one-step challenge, both are available. And then when you do get the funded account, you can be sharing up to 90% of the winnings that you make on your funded account just by simply following the rules, following a process. So give it a go. Come and join us. We're here to help. And we'll see you all again tomorrow. Tomorrow is, let me just go back to the calendars. Not that one. Should use our calendar, shouldn't I? Oh, it's gone. Back here. Don't want to move. There we are. Tomorrow is the big day of the week. It's US CPI, and we've also got the Bank of Canada. So I'll be live tomorrow from 12:15. Let me show you tomorrow. Which is going to give me tomorrow? Just tomorrow? No, doesn't want to do that. Let's scroll all the way down here again. There we are. Tomorrow, CPI. Core CPI is the key one. 12:30 GMT, Universal Standard Time. We'll be here from 12:15. And then later in the day, we've got also got crude inventories as well. It's a big day. But we've got the Bank of Canada and their press conference, their rate statement, expected 25 basis points cut from the Bank of Canada with their new Prime Minister we mentioned earlier. So let's see what that dollar CAD position is doing. So big day tomorrow. It's the day of the week, the 12th of March, Wednesday, US CPI. We got PPI from the US on Thursday, and then Friday we got the University of Michigan data later on in the day. Now remember, all of this data for the next 2-3 weeks is an hour earlier than normal because the European summertime doesn't start till the end of March. The North American summertime started this weekend or last weekend at the beginning of March. So take care, everyone. Euro continues to test back into 109, but remember we are at highs not seen since the first or the election day, 5th of November, the beginning of November. Take care, everyone. See you all again tomorrow. Be good, and if you can't be good, stay safe. All the best. Bye-bye.